Welcome to Invest. We talk about investing, finance, and professional development. As the current time of 10:05 a.m. on the Eastern Time on January 14th. Hope you guys have a great 2 weeks into the year so far. Ethereum closed $1,523, up about close to 5% so far. As you can see on the left side of the chart, the overall crypto market is relatively green at the moment across the spectrum, up close to, I think on a median perspective, 5% so far. And on the altcoin side of the house, it's definitely a lot more volatile. You could see that Solana at the moment is currently up 22.4% so far. And what's really driving this is a collective of macro and micro elements. Obviously, with respect to the last 48 hours so far, there's been, collectively lack of real substantive news. Just more just like, the media companies try to, backwash, or regurgitate the same messages again. While we close on the Friday on a relatively neutral tone. Nothing real specific, right? The ultimate factor that we still need to understand is what's going to be happening on the upcoming FOMC meeting, which is still going to be the seismic catalyst on driving the trajectory for the rest of the year going forward, right? Obviously, based on historical synopsis, we know that we have had 375 basis point rate hikes, 150 basis point rate hikes from the previous one. So now, what's the next step, right? Are we going to see worsening of inflation, or are we going to see more of a moderate incremental progression from here? And obviously, as we have seen across the media front, Jamie Dimon from JP Morgan said that recession is going to be happening, so prepare for worse. And it seems like with respect to just like on the media front, Brian Monahan from Bank of America is also saying something similar. So, with respect to the positive Friday closing, it has some direct correlations to driving the crypto market to go up. But in terms of like why is it really going up, it's not really mainly due to anything, specific. So that's something we have to be, kind of be, cautious of. It seems like the pump that we're seeing is a combination of just technical and psychological pump conveying into this motivational type of propelment that we've gotten so far. So it's a non-substantive, buying pressure, because ultimately nothing has really been tactically solved yet. But that also makes sense because of the the spread between substantive and non-substantive. You always want to be buying into any investments when it seems psychologically unfavored, but if the fundamental will catch up, which is the long-term vision of it, it will subsequently appreciate from there. So that's why you always want to buy when the market is red or when everybody's panicking, relative to when everybody's like green and happy. That's like the time when you should technically take profit or pull out. So it seems like we are seeing the some sort of a psychological greed being baked into it, because of the green pressure that we've been seeing so far stem from the first catalyst, or you could call that the match that lit the fire so far, would be the positive job numbers. But again, the job numbers depicts December, which doesn't really do anything with respect to deep foreshadow progression going forward. So we still need to be cautious, right? So beside that news, you could see that across the spectrum, just more negative news. You could see that JP Morgan again, right? As I talked about recently, I think last video, that fourth quarter revenue, despite it topped it, but recession is now the central case. So it seems like every firm, is indicating some sort of a, you know, negative foreshadow, but ultimately, what's the timing of it? Are we going to have the entire 2023 in the recession environment until 2024, or are we going to have one fourth of it, two-thirds of it? I don't know. Let's take a look at it together so we can kind of quantify that for us, okay? So let's take a look at the technical with respect to recording time of 10:10 a.m. on the Eastern Time at 15:22, up 4.87%. You can see that during the midnight, we try to pump up to the next level of resistance, which is 1650. This is something we talked about in our technical video yesterday. Right now, the risk is very high, at 84 out of 70, large separation on the technical front. We just leap up and away. And crypto trades on a momentum, and it seems that we are elevating quite sharply. So this concerns me because this is purely a psychological pump, not substantive consolidated pump that will last long, if you may, right? So taking some profit up on top will be very logical. And also with respect to Bitcoin, you could see that we got to the next level of 20,000 above. So that's a monumental level as well, which triangulate into what we see in front of us. On a weekly perspective, you could see that we're still very separated. We have broke through the resistance level that we have prior. So right now we are at 51 out of 70. And with respect to are we like fully baked? I would say we're still in the mid of the in between levels. So technically seeing like a higher level would not be a surprise, but typically as you're in the mid of the two levels, it's more likely to see it go down from the support level or vice versa than actually keep propelling upward. So that's something you want to be cautious about. On a monthly, you could see that we have been consolidated gliding at 1550, but you could see, you understand that 1550 is the level. We are basically 30 bucks below it. So the next level of technical support is 1450. So it seems that we are in the mid of forming some escalator, which is forming higher lows, right? Which is the staircase that you need to incrementally go up from here. So that's a good thing. We like that. Bitcoin, same thing, right? Monthly is gliding. Weekly, it is, not the best. You could see that it's doing something very similar with the mid between levels. It's not the most substantive level that we're in right now, but it's good that we did break above, the 20,000, and you could see that with respect to historicals, it seems that we're about to go up to the next level of support, which is 21,500, which is we're not there yet, as you can see clearly. And then on the daily, very extended, we're at 90 out of 70, very overbought. So I would not suggest buying around these levels. Solana is currently up. Just take a look at Solana because it looks interesting and it peaks out interest. And whoa, daily's at 90 basically, pretty much, very very overbought. Near term wise, weekly has been just dead in the water, but next thing you know, it flies up like this. Interesting. Monthly, it is looking quite consolidated. So, the information in front of us is relatively, not the most elongated in comparisons to the rest of the key coins for obvious reason. But the risk is definitely higher in terms of the appetite wise, based on what we see in front of us. Okay, so it's a quicker one than usual. Today is Saturday, so have a good weekend. I'm just gonna head to the gym now on a fasted stomach. I had like a quick call with a friend of mine earlier this morning just to catch up before she heads off to Switzerland. She's gonna be there for like 5 days, and then I'll catch up with her back in New York later. So it's gonna be a traveling couple of weeks ahead. So apologies ahead if I'm gonna be missing us on our daily cadence. But I appreciate you. But in the meantime, it's a good week so far with this like green days that we've had so far, right? So have a good one. Have a good weekend. Stay safe, and I'll check you on the next one. Take care. Bye.